Welcome to this explainer on the 2026 AI chip war. Now, if you've just been reading the mainstream tech headlines lately, you'd probably think we were witnessing the fall of an absolute empire. Analysts everywhere are declaring the end of NVIDIA's uncontested hardware monopoly. But today, we're diving straight into the actual data to uncover the true financial reality. Because what we're really witnessing isn't a defeat. It's a massive pivot from a total hardware monopoly into a highly diversified, multi-front battleground. So here's our map of the battlefield for today. We'll hit the monopoly myth, the staggering revenue reality, the counterattacks from AMD and Intel, the rise of custom silicon, NVIDIA's platform defense, and finally, the shape of the 2026 AI landscape. Let's get right to it.
Part 1. The crumbling monopoly myth.
Okay, so there is this massive cognitive dissonance going on in the industry right now. It's true, NVIDIA's unit market share is definitely experiencing some dilution. Back in 2024, they peaked at about an 87% share of the AI accelerator market. By 2026, analysts project that's going to slip down to somewhere between 75 and 81%, or actually closer to roughly 70 to 72% if you factor in all the internal chips built by the big cloud providers. But here is the crucial thing everyone is missing. While their specific slice of the pie is shrinking, the absolute size of that pie has just exploded. I mean, holding a 75% share of a market that now exceeds $200 billion is vastly more valuable than having 87% of the tiny 2024 market.
Part 2. The staggering revenue reality.
The actual reality of this situation is found right here in this staggering number, $75.2 billion. That is NVIDIA's data center revenue for just a single quarter ending in April 2026. That represents a ridiculous 92% year-over-year growth. And it's all supported by these unbelievable chip-level gross margins. We're talking 84% margins on the Blackwell B200 and 88% on the H100. Because of that, they are projecting $1.5 trillion in distributable cash flow over the next 5 fiscal years. They have so much cash, they can essentially outspend the entire industry combined on research, development, and supply chain.
And that financial dominance, it creates a competitive chasm that is just breathtaking. When you stack them side by side on a quarterly basis, NVIDIA's data center business is roughly 13 times larger than AMD's $5.8 billion, and almost 15 times larger than Intel's $5.1 billion. And honestly, keep in mind that a huge chunk of Intel's revenue isn't even dedicated AI accelerators. It's mostly driven by legacy Xeon CPUs capturing some volume in edge inference.
Part 3. AMD and Intel's counterattack.
Now let's look at the traditional silicon rebels trying to secure a foothold here on the merchant front. AMD is actually doing quite well as the industry's second source. They've managed to carve out an estimated 5 to 7% of the 2026 revenue share. And they did this by securing these absolutely monumental 6-gigawatt GPU commitments from both OpenAI and Meta. They're even going straight after NVIDIA's rack-scale dominance with their custom MI450-based Helios rack system, which ships in the second half of 2026. Intel, on the other hand, is sitting at a pretty minor 1% share right now. They missed their revenue targets for the Gaudi 3, so they're really banking on their next-gen Crescent Island GPU to spark a comeback. But since that doesn't even sample until late 2026, it's effectively a 2027 story. Oh, and to highlight just how tangled and crazy these industry alliances are, NVIDIA actually invested $5 billion into Intel back in September 2025. Yeah, let that one sink in.
Part 4. The custom silicon threat.
But here's the thing. The true existential threat to NVIDIA's dominance isn't coming from AMD or Intel. The fastest growing competitor in this space is coming directly from NVIDIA's own largest customers, the hyperscale cloud service providers. Basically, the tech giants realized buying pickaxes from NVIDIA was getting way too expensive, so they're just actively insourcing their own chip design.
Just look at the exponential growth here. TrendForce data from May 2026 shows custom ASIC shipments surging an incredible 44.6% this year. That is almost triple the 16.1% growth rate we're seeing for general-purpose merchant GPUs. In fact, ASIC-based servers are projected to make up almost 28% of all accelerator shipments in 2026. You've got Google's TPUs, AWS with Trainium and Inferentia, Microsoft deploying Maya. We even have OpenAI partnering directly with Broadcom to build a custom chip codenamed Jalapeno, specifically designed to bypass the insane cost of NVIDIA's hardware.
So what's happening is the chip war has effectively split right down the middle along workload lines. It's like a Trojan horse. On one side, you have custom ASICs, which are incredibly successful at displacing GPUs for high-volume, highly predictable inference tasks.
But on the other side, the cutting-edge training and frontier model development is still totally locked to NVIDIA. Because algorithms are evolving so rapidly, developers absolutely need the architectural flexibility that only general-purpose GPUs and CUDA can provide.
Part 5. Defending the platform moat.
So how does the incumbent protect its high ground against all of this? According to a 2026 equity research report from Safra, NVIDIA isn't just selling fast chips anymore. They're executing a ruthless, full-system platform defense. It's built on 4 deeply integrated layers: the chip architecture itself, proprietary end-to-end networking, supply chain monopolization, and the CUDA software ecosystem. And the brilliance of this is that competitors simply cannot replicate all 4 of these layers at scale.
Let's look closely at Layer 3, the supply chain. This is where NVIDIA plays incredibly hardball. TSMC currently controls roughly 90% of the leading-edge foundry market. So NVIDIA just weaponizes its massive, bottomless cash flow to monopolize priority allocations of TSMC's 3-nanometer wafer capacity and their advanced CoWoS packaging. By stepping in and pre-purchasing over 50% of the entire global output for high-bandwidth memory, they are quite literally starving their competitors of the crucial manufacturing capacity they would need to fight back.
And then there's the final, most impenetrable layer, the CUDA software flywheel. They've been building this for 2 decades, and it now boasts over 7.5 million developers. It is the ultimate lock-in. Migrating away from CUDA means an engineering team has to rebuild all their performance optimizations completely from scratch on an unfamiliar software stack. That creates such incredible operational switching costs that capital alone, even Apple, Google, or Microsoft levels of capital, cannot easily overcome it.
Part 6. The 2026 AI landscape.
So stepping back and looking at the landscape today, yes, NVIDIA's exact market share percentage might be slightly lower than its absolute peak in 2024, but their core financial, physical, and software-driven dominance is starkly intact, and their platform moat is more heavily fortified than ever. As this incredible industry continues to shift and evolve, I'll leave you with this final thought to ponder. In the long run of the AI chip war, is the true threat to a hardware empire the traditional competitor trying to build a better chip? Or is it the massive customer who suddenly realizes they don't need to buy one at all? Thanks for joining me for this explainer, and we'll catch you on the next one.